Hey everybody, great to be back with you. Mike Fairborn here for our swing trading class, a class I do look forward to each and every week, and it's great to be here with all of you. Today I want to take a look at a number of different potential setups in the market, amongst a number of different indicators actually that we've been focused in on. And as you know, in this class, we do look at that shorter term time frame for prices to be potentially trending higher, to be forming price patterns, whatever the case might be. But we do like to link that with, maybe some of these interesting indicators that might give us potentially additional confidence that a move might unfold. Of course, all traders are different, and we just like to look at examples in this class. But having said that, let's dive on into just welcoming all of you. We're not going to dive into disclosures just yet. Hello to you, Paul. Great to have you here, as well as Life in the Fast Lane. Love these titles. We've got High Speed. Nice to have you here, as well as Jose, Lola, Joe. Welcome to Joe. I did see Joe a few years ago back in New York, but I do remember that, taking a photo with Joe. It was great to have her there. Newbie, Will. How's it going, Will? As well as Andrew, Danny, Kevin, Beth, Piero. Nice to have you all on board. Some new names. If you're not familiar with this class, folks, we do swing trading, and that is a short-term time frame, normally 3 to 10 to 14 days or so, trying to get really that movement in that chart, that short-term move to the upside or whatever the case might be. And also, I'm joined in the chat by a good friend of mine, great colleague, Mr. Cameron May. You'll see him in the chat as CM. You can follow Cam and I on X, Cameron May. Make sure you spell that correctly, Cameron May, just as you spell Cameron, Maycs. You've got to get that exact. Otherwise, you will definitely find some imposters out there. Mine, as Cameron has posted as well, is Mike Fairborn CS. Now, having said all that, let's hit some disclosures quickly so we can get this show on the road. But welcome to all of you. The information here is for general information purposes only. Now, options do carry a high level of risk. They're not suitable for all investors. We will throw options in, definitely with our stock trades pretty frequently. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a high risk of being assigned early. Now, the short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Paper money software applications for educational purposes only. Investing involves risk, including loss of principal. There's no guarantee that an execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Dividends, if we get into those, and we always hit a couple dividend paying stocks, those are not guaranteed. Some traders do look at a long history of dividends, but they can change at any moment as well. Now, we do look at futures as a reference. We don't trade futures in this class, but it has been a good reference for us because a lot of these futures might correlate to different stocks that are out there. So just a quick note that futures options trading involves substantial risk, not suitable for all investors. And what I meant by that is sometimes you might get like oil futures that could be showing some strength, and that could present strength to a number of different stocks out there as well that are in the energy industry. That's all I was trying to say there. Okay, well, let's tune into our charts for our very, very quick review, because I know many of you folks, this may have been your 5th time as a market review today, because a lot of us folks do like to do that, for sure. But just as a quick note, just some big areas on the S&P, for example, to keep an eye on. Apologize if it is a second review or a third or fourth review, but we have broken above some highs 3 days ago. We were at all-time highs, and that's always significant. We're at an all-time high range, and oftentimes, this is how 500 companies will go up. They tend to go in ebbs and flows. I'm a hiker. I do a lot of mountain biking more than anything. And I'll tell you what, the trails that I go on, peaks and valleys, folks, peaks and valleys. You see that? A lot of peaks and valleys. It's tough to get all 500 going in the same direction. And oftentimes, and we talked about this a little bit last week, and in the markets and sectors class too, very, very unusual for prices just to the moon type thing, right? Those parabolic moves, those are rare. If there's like an extreme level of a move to the downside, sometimes you get a extreme move up because of overvalued nature or undervalued or overvalued nature. This was a tariffs kind of move. But folks, more usual than not is that you might come back and just do we don't know if we'll come right back to this level, but sometimes you do this staircase pattern, 500 stocks. So, when you've broken above a high, oftentimes traders will say they might expect actually prices to come back down a little bit. Not too unusual. In fact, that might be more in line of what's historically happened. Now, anything can happen at any time, but these were new highs at one point over here too. And what did we do? Well, we broke above and we tested. We broke above and we tested. Here's the prior high, tested, kind of came back to this range again. So it's interesting, and that was a big recovery of value over here. This might have been clearly undervalued to some traders. Obviously, the market considered that. We came down and hit a big round number. There it is, 5,000, and kind of got that V-shaped bottom. We'll have to see now with higher levels what's going to happen. We're kind of entering this interesting phase in the market where not a lot's going on right now because we're in between kind of a couple of different earnings announcements. And really earnings, just so you know, they begin to kind of roll back in about mid-July earnings season. You'll start to see it spike, the sheer number of companies that are reporting, let's say in the S&P 500, mid-July-ish. And a lot of times that will start with the financials. So could be a little bit slow, and sometimes over that time frame, you might get a consolidation. That could add to this trade. So we shall see. But let's continue from here. All right, well, we want to look at some of our previous stocks, and I did promise an individual earlier today that would have been Probability Trader. That was actually yesterday. That is his name, Probability Trader. That will, hey, let's look at some of, some companies on the watch list, and that's kind of what we do in this class. We sort of create a watch list and then do some example trades as well. So you'll kind of see that watch list created as we go through this. Now, let's take a look at what we do have, and MDLZ was one of those stocks that we've been keeping an eye on. Now, this company had a sideways range. This is Mondelez, the old cookie trade, if you will. This is the company that does Oreos. They do a number of different snacks, and they do pay a dividend. We've talked about this right here. It's about getting close to 3%. So clearly in that dividend range that a lot of traders, investors will look at. We just got through a dividend right there. Payment. Now, you can see we did break above the triangle, and we have been making some higher highs and higher lows. I think we still have some paper profits in this trade. This is a paper trade, and how are we doing on this right now? Okay, it did lose some ground today, but still up maybe in the 800 range as it stands right now. We've got an initial target here on our 300 shares at the T1 level. So that is the flag over here. Or the breakout of a triangle as well. But we're breaking higher, but that's like 100 we're looking at here, or right around 70 to maybe take that off the table, because there could be resistance at that point as well. The next point is the target of the triangle, and that's the highest point down to our lowest point right there. And that would be this level right here, breaking out of the triangle, which occurred right there. So all we've done is simply add the largest range of the triangle to the breakout of the triangle to the upside. And then last but not least, we've got a much, much bigger target right over here. And that is the entire pull of the potential pull of the flag. This price range right there equal to over there. Right there. And that's the last 100 that we're looking to sell. So this is a great example. I like to start off with this stock too, as we review, as we're just still kind of sitting in here and waiting. But I want to let you know that some traders might look at different time frames. The swing trade is 3 to really 14 days very, very commonly. What I wanted to show you here in this is that sometimes you can use a little bit of money management and maybe not take everything off at the T1 level, right? When you're reaching the prior high, target 1 versus... put it in there, target numero uno versus, let's change some colors, target numero dos, up top here with the full flag pattern. This would clearly be beyond our 14-day range, and I do not want to confuse any of you there. I'm just letting you know that this was kind of a longer-term pattern. Now, it could have spiked up, and by the way, look at the size of the spike previously. It was a big, big move, something where we could have hit a higher target with a 14-day move, but I still want to put some other things on there because hold on another trade. And why? Because some traders, this might be a buy signal for them. If you can get above this high level, and I'm sorry, we've got our targets kind of hiding the high. It's right here where I put in that target line. But if we can get above that level and hold, some traders will say, Mike, that's my entry point. hypothetically, right? Some traders would do that and they would be in for these bigger type runs. So I'm just saying we're continuing the swing trade, but maybe we could just keep the position on, show you a little money management on the side for some of these longer term moves, if in fact it unfolds that way. Okay, now with that, I'm going to do this because my expectation here with this is that because we are getting higher highs and higher lows, I'm going to raise our potential exit level, our stop, now just below this last low. Do you see that? I've been raising it to the higher low, just above that higher low each time. We'll only have 200 shares thereafter, and we'll start to get some targets and some stops in as well on that. Okay, so that's in place. Let's look at our CAT trade. There's CAT. Now, CAT has unfolded for us pretty well. We only did 50 contracts, or excuse me, 50 shares. 50 shares of this, but you can see this was our flag, the formation of the flag. The trend had broken prior highs, still going higher. This is a big play on tariffs, maybe more of that money coming into the U.S. And when I say tariffs, we are using another T. Trillions of dollars coming to the U.S. Caterpillar specifically in the construction area. We've looked at John Deere more in the farming area, but this could play a role. And we kind of saw the rally very, very sharp out of this range. And there's the flag. On this trade, we're doing, how are we doing right now? Up about 1,700 with 50 shares. It was expensive. We only put a little bit on. Again, this is just a paper trade. But the one thing we need to talk about here on this trade is the possibility of capturing potential gains. Now, this is right up here. We've rallied up to about 400. You can see we're not near our target just yet. We're getting dang close though. And the reason why we put this alert in here is because this is to signify, it's going to text me directly. You can email us. It could make a sound on the computer. That's difficult though. If I'm not by my computer, I might not hear that. But when you come up to a level where there is resistance, you got to be careful because sometimes you just do one of these and then you come right back down. Now, what can we do to protect against that? Because we are above the T1 level. And what we teach in this class, a lot of times, when you get above T1, T1 was a very, very short range. Again, T1 is this. The target one is the recovery back to the top of the flag pattern right there. That's T1. So when we reach this range as it stands right here, we've hit our T1 level. We've hit that level. It was very, very short. We did not take any profits on it. In fact, we let this kind of consolidate at the top of the highs, which was a positive sign as well, and it rallied up. But for a potential exit, in case it were to go against us, what can we use to help capture those gains? Well, we could use something as simple, not a very good, as simple as a simple moving average. Here's a 9-day. There's also 10 days out there. The 9-day simple is very similar to, let's say, a 10-day exponential. That's our default. It's kind of interesting. So I'm just going to go ahead and put this on here. There's our right there. We're very, very close to that 9-day. A lot of price action can occur above, once you get above the 9 or the 10-day. We're so close to it. I'm going to do this. And the reason is it looks like we might have bounced off the 10 right here, and that could be of interest to us. So I'm going to change this to the 10 because if prices go below that, maybe that could be a great way just to capture those gains in case this guy goes south. I mean, this is how, and by the way, this comes from years of actually going through it, doing it the wrong way, but doing it a different way. I would say it the harder way, and that's this. Waiting for this to happen to try to capture the last little bit of my gain and risking prices coming all the way back down. This is something we could put a signal on here as well in case prices dip below that line. I'm going to just do this right now because I do want to put an alert in here. In fact, if I dip below here, right click, that's just a lot of gains that we might not want to give up if there are ways to give us more indications that it's dropping. So if we go at or below this level, I'm just going to make a really clear note in here. Below 10 DMA, 10-day moving average, Exclamation mark, just to make sure I'm aware of that. We're very, very close to it. I would not want to see something come up and move below there, and we miss that. So that's how we look at the T2. Once we get above T1, we love to give it a chance to keep going. And the funny thing is we dip below we didn't actually close below that level, and you can watch for that, or a couple of closes below, but we got very, very close to it right here on the secondary breakout. We just kind of bounced off it, but no closes, and it held that level. It's a very, very tight range. If we didn't want to keep it that tight, we could use something like a 20. Let's just show you what that looks like right now. Don't want to spend too much time on this because it is just a review, but it is a position that we've put on, and I think this is a very, very interesting point. I'll just say this, something I learned the hard way for trying to get the last few cents as prices take a dip lower, and I end up giving back, I don't know, all of it and then some. Yeah, I've done these things. I'm not proud of those times, but I've done it, and there you go. There's your 20. See the flexibility that gives you? Maybe a little bit longer term trend. This is swing trading, 3 to 14 days, and we're basically sticking with that range right there. So we're keeping it tight, but some people might want to, if they happen to merge into a longer term trade, they could decide to go with that shorter term moving average as well. I'm going to kill the longer term one, I should say, right there. All right. Oh yeah, Lola, count me in on that. And that's this interesting thing is the market. It does take time, and that's why I'm so glad that each of you are here listening to Cam, listening to myself as we teach these different concepts, because they are so valuable. It's more challenging, I say, to learn from somebody else. It's kind of like wisdom. It's trickier because but with a lot of examples, you can learn that. For me, I was just one of those guys that I really didn't have this around, but I did learn the hard way on a lot of different fronts. And so love to be able to pass these different concepts on to see if it does, can help you guys as well. All right, we got a couple more that we did have, and we put a couple in last week. Let's just do a quick note on those because we do need to get moving forward. GFC. I put that wrong. Probably GCF. Neither one. GFC or my chart's just slow. I'll tell you what I'm going to do is I'm going to go to my monitor tab of GFS. GFS. Okay, so GFS, I looked at this earlier. It did break out of that triangle today. You can see the target up top here. Do we have this moving average in place? Because we just broke above our first level target. We do. It's right up here. So this is our target up top. This is the extension again of the flag, and that was a nice little breakout. Now, what did we use here to kind of help us with this? Well, we looked at maybe some of the TTM information last week. Found a fascinating indicator. I know Cam has done some classes on this as well, but the Aroon indicator, not oscillator. We looked at the indicator specifically, but hey, this was interesting because we came right back up to these highs right there. Take a look. There you go. And maybe that could be we didn't come up to it. I should say if we come up to it, that could be not only the target, but also a resistance point. And a lot of times, it's fascinating. You'll get these longer term sort of flag patterns that come right up to resistance. And you'd say, gosh, sometimes the market, not very often, but sometimes it's a little bit fair. It says, you're hitting resistance. And by the way, you might have a flag pattern that's unfolding here too. Maybe a couple reasons that somebody might lock in gains. We saw that with this stock. I don't know how we're doing today on it. I just saw the breakout. Much of our gains. In fact, we were actually holding. Today was really the profitability day. So getting real close to 200 on this one. Just 100 shares. Just another example trade that we're showing here in terms of trying to look at the trend, maybe other indicators. I believe we also referenced down here. Remember our money flow. Really, really quite strong as prices were breaking in the new highs. And that was a positive. And a lot of times you just get that follow through going higher. I mean, we were above the highs. That really kind of is even above this range over here, which through a money flow perspective is really quite a positive move. Because look at this. I mean, we've already taken it out. Money flow says that according to money flow. Now, every indicator has its own little thing, but it says, hey, we should at least get up to the prior high. that matched that price level, right? So that's another indication we kind of looked at too. So, hey, we'll see if it does unfold there. But what are we thinking about now? What about our stop? Did we just break out? We didn't close above there. We've still got 40 minutes left to go, and we could close lower. But now is the time for us to click on that stop and move it maybe just below that 10-period moving average to fit in line. I'll put it below this low, assuming we do close higher, but we just really raised our stop potential here, potential exit level, I should say, on that particular trade. We had one more, and then I've got to jump into our discussion here because we got plenty to look at here. But here is Qualcomm. Now, Qualcomm also, too, it did have a pretty good volume move. RSI, it's getting there. It's a little bit of momentum, but not a ton of momentum up to this point. We've got a very, very tight range. In fact, Qualcomm doesn't have to do too much to get up to this level. But Qualcomm, being in technology, and technology has led the market higher. Remember what we saw in the S&P 500? What could happen here? What could we expect before earnings kick in? We might not see a follow-through. In fact, we could still see more consolidation. This was just our earlier discussion on the market. Here's the pullback right there. Potential. I should say, there's the prior highs. This could now be, because it was resistance, support, but some of the techs have really led the market higher. And having said that, maybe it does pull back in this week of lighter announcements, earnings for sure, very, very light. Send an X post out on that. We just had very, very light week of earnings, but that's Qualcomm, kind of steady as she goes there. Okay. Now, there are some other companies out there. I did a example I wanted to show you guys because we have talked about the TTM, and we will get different indications with the TTM squeeze as well. I'm going to pull up right now just a six chart example here of the TTM of potential flag patterns, trends that could be of interest for us. Some that have developed, some that have already passed the TTM squeeze. What I'm going to do right now, though, I'm just going to right click as we're kind of looking at a watch list really of stocks. We're just doing it in kind of chart format right now as we dive a little bit deeper into that. Now, I did want to look at the TTM squeeze, but we're not going to forget about the other indicators like the Arun showing very, very interesting strength. And I'm actually want to add the Arun to some of these and just see how it's doing based upon our discussion last week. Now, just a quick note on the Arun and some of those other trades that we've done in the past. If you are new to this class or are new to our channel, I do encourage you to subscribe if you are interested in doing that. If you're getting value out of this class, do me a favor, just hit that like button. Lets me know that this is of interest to you. We'd love to have you subscribers as well, and just click on the subscribe button so you can get this kind of content coming up more frequently as you subscribe to the Trader Talks channel. Now, here is a look at how you might be able to tap in to some of our other example watch lists, I should say, not watch lists, but playlists of stocks. And here's a good list of what we've got here. This is the one we discussed last week. Some traders will use just one indicator for swing strength. That was the Arun. There is that playlist. You can take a look at this. This can provide information for you guys if you are interested to look at last week's discussion, because, well, we're going to hit, that was really our discussion on the Arun indicator as opposed to oscillator, but that is there if you want to check it out, take a look at it. By the way, again, yeah, a lot of good stuff that you'll see within our channel here. Okay, back to our discussion. Now, the TTM squeeze, and this is kind of based on an earlier discussion that we'd had, and you'll find this discussion in that playlist as well. But different indicators kind of develop at different times in the market, and sometimes some stand out more than others. It's one of the things I like to do for this class is just kind of see what has been kind of moving and kind of correlate that to different indicators that might be showing indications of, because it varies. You're not just going to choose one indicator. It works all the time. There are just different indications out there. So this is one that was showing some interesting signs. I'm going to just right click so we can zoom in on these right now. First one, MDB. Now, when the Bollinger Band trades below the Keltner channel, as we talked about in this class, you will get what's referred to as that TTM squeeze. And this could be kind of that rare time, that rare indication where price compression or price volatility is at extreme lows. What's interesting for this class is we oftentimes will look at extreme lows without actually talking about it. Extreme low price action or volatility. Where does that happen at, folks? Generally won't happen when prices are moving higher like this, but it might happen in a triangle pattern, in a flag type pattern. We've talked about flags as well, but look at this. Notice prices moving a lot slower in the flag. When that occurs, we might get other interesting signals, rarer signals for sure, of a TTM squeeze. Look over here with me. Just if we're looking at MongoDB, pretty good trend. Look at all the green. That means that, price volatility is basically high. It's in check. It's not an extreme low. But because it began to get a little bit tighter over the range, the default here of the 20 days, all of a sudden, wow, it's getting a little bit tighter here. What does that look like? Maybe. You guys are very good with technicals. I know many of you are. What do you see right there? A little bit of, you got it, Paul, consolidation. Exactly, consolidation. So we're just getting an additional read on that from additional indicator there. And sometimes when this triggers and gets back to green again, it could go higher. Now I'm going to show you how to add this again, because you have to do one little thing here. If you add the indicator by itself, TTM squeeze right there, it's going to give you a lot more than you bargained for. It's going to give you a number of different indications. We're just looking at mainly price action up top. We're looking at the swing trade, but we want to try to correlate that to maybe, an extreme change in price compression and an explosion outside of that range. And so with that, what you want to do is just go into the indicator itself. It's this bottom one. I'm going to click on the wheel, and I'm just taking out the histogram, all those colors. The colors are pretty cool, but I'm just going to take that show plot out, click OK. We'll have two of them there. I don't need two, but that's how I got this to set up this way. In my Think Script class, if it interests you guys, I do create scripts that will scan and find these setups for us quickly as well. But today we're just looking at the potential for a breakout here. Now, as we look at this, I'm going to right click here and just say, yeah, hey, if I start to break out above these highs, well, that could be a breakout. So I'm just going to right click here and I can put on trades. I'll watch this for trades this week for our class, and we can add maybe, 50 shares or 100 shares. It's kind of an expensive stock, but I'm just going to go over here and just take advantage of the alerts and just say breakout. So that's the text message it gives me right there. Voila. Okay, next one. Any similarities here? We've been in a long consolidation here, right, on Delta Airlines. Will be very, very interesting to see what we get. Do we see money flowing back in to those those cyclical type stocks, right? Where people are going out on more vacations, just more travel. You'll notice, I don't know, I haven't even pulled up the cruise lines, but the cruise lines themselves, well, they've been kind of strong. How do you get to the cruise lines? Well, maybe you fly to them. I'm not sure. I guess if you're in that neck of the woods, you might drive to where they're at, but some people do fly. We don't know. Maybe this is kind of a late mover, a laggard, so to speak, and it could follow through later. But we'll see how that unfolds. But what are we looking at here? Well, maybe a breakout, not maybe above this high, but maybe that high or near that high. And we're holding, right now above 50, which is kind of one of those interesting round numbers. There was a high there, gapped above 50. Look at all this action around 50. We're kind of holding support at 50 right now. So that's interesting, and that could be real positive. But what about a breakout above that range? If we see some flow, like we saw into some of the cruise lines, into this consumer cyclical type stock, I'm going to right click here. We'll do the exact same thing here, and we will just say breakout. And we'll put a few of these in, and we'll put some of these trades in if, in fact, we do get that follow through. Because a lot of times we just don't get the trade that we want in this 40, 45-minute class once a week. So we can look at the setups, and I'll try to put those in afterwards. It would be so nice, if we could get these all going during our class. But folks, Too tight of a window, isn't it? Here is one example of sort of that follow through and breakout. Now, do you see over here with me? Can you guys see where we might have broken out at? And then also, too, where there might have been that confirmation there as well. Let me just take a look at that. Yeah. So the question is coming through. Hey, can we take a look at some of those trades that have been maybe sideways for a period of went sideways but haven't broken out yet? It's a good question, Gary. Let me just I can actually answer this right now. I've got a few more of these TTMs to look at right now. By the way, a quick note too. Have we hit our target? There's the potential flag. There's the bottom of the flag, folks. The flag's going to be much, much higher, right? Let's just go ahead and paint that range in right now because prices could come down and rest near a prior high, or they could start to break out again right here. So let's just do this. I want to know if we're getting close to those highs. I'm just going to right click real quick, create an alert at or below. Remember, the default is at or above. That alert will signal right away if we just accidentally put that in. So remember, you didn't get that signal, that alert in if you did at or above. I've done that before, just kind of ignored that sound, but it's got to be at or below. I'm going to say support, something like this, just to kind of have me remind me of this potential setup right there. Okay, but there, by the way, quick note, where might that target be on this stock? If we looked at this, let's just use some of these drawing tools to help us. This is the extensions, the Fibonacci extensions. There's the low, there's our high. We click one time, click a second time, boom, we've got our 100% level of that move. It's just below 33. So I am going to just highlight that level as a target as well. At or above, T2 target. We're not even in the trade yet, but I've just lined this up because in case this one begins to bounce and go, because it's already begun to kind of signal an expansion of price action. Now, the question is too, just to jump back to that, Jerry's question on that is, what do we do when it does go sideways like this? Well, one thing you can do is you can look at it and say, well, my expectation was an immediate follow through. I will say this, it can depend upon the time frame. Notice the extent of this run to the upside. It's a very interesting question here. This runs up and it lasted, a few days. I'm just going to draw a line down here to kind of represent how long that took. Now, the consolidation should be very, very close to that same range if it extends longer. Say, for example, we're okay with this move and we like, let's say, a 14-day bounce right here that we got within this span of time. And we thought that it could break out and follow through, kind of like this round right here. Okay, we thought that it could be a swing trade, but what happens is let's just say that it consolidates even longer and longer and longer. And I've read this in a book, a couple of books, well, just years ago, and there's a lot of technicians that have talked about this, but they say that the longer a pattern goes, the more likely it is to fail. And so if it doesn't operate within, and I'm just choosing a bull flag time frame right now, we're kind of just saying this time frame up should be somewhat similar to this time frame down. Okay, and if it goes like a lot longer, oftentimes we just didn't get the recovery. We didn't see what we expected to see, and then it's just more likely, a lot of technicians will say, that you're just going to see a breakdown. So what does that tell us about our exits? Well, it could say we could start to take something off the table here, Gary. We could take it off the table. Like, let's say we could, let's say we had 200 shares. We're saying it's not doing anything. I'm going to take 100 off right now. And if it starts to break a low down here, I'm going to take the remaining 100 off and just close that position. But it would certainly mean that you would keep, your potential exit in place, so that you're aware of that level, that it's not working. Where this becomes interesting is we've done a number of swing trades that look a lot like this. Look at this time frame. It runs up 2 to 5 day pullback. Runs up 2 to 5 day pullback. Runs up. What's the structure of that trend right there? Structure of that trend is a big move up and a short consolidation. Will it stay that way? We don't know, but if it starts to do something different than it has done previously, that could be a red flag. We could say, oh, it might be changing. So is it outside the range of what normally we've seen? That could be of interest too. I like where you're going with that, Gary, though. Did that help? Let me know if that made sense, if there's anything else I can clarify there, but there you go. That's an interesting one to keep in mind. Now, here are a couple that have already just barely begun to come out. PTC. These are all S&P 500 stocks or NASDAQ 100. They're all in that index. Look at this move right here. We're just barely starting to break. Now, if we do continue higher, folks, do we have a longer potential flag target in mind? We might, right? We just hit a T1. If I use this off the bottom or this move, I'm going to use the more conservative target or projection right there. Here's our break to the upside. And here is this move coming up, and it could be substantially higher. Let's go ahead and put a trade on right now. I know we're not getting it at a perfect time, unfortunately, in this class. If it came at the perfect time, we would have put it in. In fact, that would have been, well, a lot of traders would have said, hey, you're getting a bounce. There's your hold right off the bottom. There's the bounce off the bottom. It's a little bit like a Morningstar pattern. We've talked about that before. In addition, a break and a close above the range. Look at this move. You close above the range right there. We're not too far away from the target, but if it continued to go higher, let's just track this as a paper trade to see where it might go. Ooh, big round number up to 200. Let me see how this stands as I map this out with our Fibonacci extensions. One click, second click, and down there. Where's the 200? Where is the 100 projection? 100%. And where is the 200 level? Lines up. It lines up. Now, does it mean that's going to go there? No, but if it did, maybe there's resistance there as well. Let's put a trade on right now. We've got it. Okay, so we know where it's at, basically 200. And where might our exit be? Potential exit. Well, it could be a trade below this level. We're going to try something new here and get this set up in the demo account. So let's go ahead, and I'm just going to do 100 shares right now. Now, it could easily pull back here, folks, obviously, but we're just going to right-click here. It's off. Okay. Oh, I got to do this. Sorry. No, I don't. We'll just do PTC. That's okay. PTC. Right-click. It trades about 500,000 shares thus far. Let's see. Options, a little widespread. Probably not an option type trade, right? Just wanted to look at that. OCC bracket order. Now, I'm going to go over here. We're just doing 100 shares. Let's put these as good till cancel for now, right? We got that in place. I'm going to set this up closer. I'm just going to 199, real close to 200. We can always adjust it later, but right near that level. And we've got a potential exit on the downside too in terms of our stop level. Okay. Now, if I come over here and I'm going to click on the wheel right there, there's our wheel, and it's going to pull up the wheel down below. We're going to do something a little bit different than what we have done previously. Now, under symbol under here, we're looking for a potential exit. That's PTC. There's our method. But you know what method I'm going to use? I'm going to use a study method. And that study method is going to be, I'm going to edit this. We're going a little deep here today, but I'm going to delete what we've got here, and I'm going to say, what is my condition? My condition is when the price of the stock, because we are above the T1 level, the closing price, we're looking at it now, crosses below the simple moving average, which is what we talk about. For a stop, a potential exit, when we're trying to get up to a T2 level, right? Simple moving average, we'll just say 10-day. We'll keep this down at the last day, just within one bar. So now we're using an indicator to get us out of the trade based upon the way we use the potential exit for a T1 target, just like we did earlier with Caterpillar. Okay. All right. Let's go ahead and hit this. Save. And double check. We've got everything there. We did use the condition wizard to help us do that. Click OK. And where are you? Oh, there it is. Save. I was going to be really freaked out if I didn't see the save down below, but it was there. Now we've got this on a special kind of a setup, and we'll go confirm. Folks, we want to confirm everything as we look at this in the dialog box. I'm going to send this guy through. There it is. Okay, it's a fill, and if I go over here to the chart, okay, it's got a potential stop level in place. It's very, very tight. What I'm going to do right now, I was just curious where it was at, but that should be our 10. So it's very, very tight. Maybe we want to do a 20 instead on something like this. Now I can adjust it, but I just want to go through and show you what that looked like, okay? For now, I'm going to just drag this and pull it down below this level, okay? At maybe a lower point, but that's how we would do it. Now, if I would have had more time, because we're almost out of time here, I would have put that moving average on and just shown you where it was at. But it set that stop, potential exit, right at that level. We were just barely getting above it, by the way. So there you go. So that's our point right there. Did it go? I don't know if it did that exactly. Hold on. It should have, but I think it might have done. Hang on a second. I think when I went over here, 1 second, I went a little too fast. Yep. It may have just used that prior level, because watch, I'll just show you right now. I'm going to go ahead and just do it this way. Sorry about that, folks, but sometimes that'll happen as you're going through this. At least I can show you guys where it's at and how to do it. Yeah, it's actually down here. So that would have been our target. I just need to adjust that correctly at the end. So it's still in line. It wasn't high enough. It's right there. You can see I just set it at that level. Okay. We'll dive into more details on that next week, but just a quick note, as you come into these levels, and as we pulled this up, I think I needed to set that at a market order to trigger, okay, as opposed to leaving the stop. This stop, I forgot to flip it to a market. We'll go through and do that again many more times, but folks, I wanted to hit a couple more before we're done. Look at this guy. Very, very similar to the last one. Do you see the consolidation range? Folks, do you see the price pattern here? Yep. Okay. And by the way, Robert said that as well. It is a market value. I forgot to flip it to a market. Did a little bit too quick. We did the same thing last time. Just go to a market instead of a stop on that last trade. But we got to progress here. Let me take a look at AMETEK right now. You can see sort of a flag pattern, maybe a change occurring right here. I would say there's a change in the chart. Didn't we break above a new high here? Indeed we did. Look at that right there. We hit a new high. I mean, over this range. And that's interestingly where we began to sort of expand here. So we might find support here. It could be very, very interesting to see if we begin to get, let's say, close above the high to low day. We do not have it yet. But what if we did? What if we just broke above this bar again? Because that's our little test, and we monitored it every day. Create an alert. I'm just going to do something like this. Again, we do not have the hold right now, but it may be something that could develop, right? Using some additional indications. By the way, this one just hit today. VRTX, right there. Vertex Pharmaceutical Company, a healthcare stock. Looks like it might hold above there in the next 15 minutes, but we don't know for sure. We have to wait and see on that. But by the way, that's a long consolidation. If we go right here, let's click, move to the right, the wrong one. Sorry, let's go down here. I'm just going to show you how many days we've been in this consolidation range. Right there, 16 bars. We just are coming out of it today. Could this be the breakout? Okay. Some of these too, like we just looked at. Let's look at the Arun. We looked at the Arun last week, and we're going to keep an eye on the Arun. We're not giving up on the Arun no matter what, for sure. We're going to keep tabs on it. But let's just see how we're doing on this as well. Okay, so we don't have the indication yet. We don't have a hold either. Remember last week we looked at extreme strength, Arun near 100, and definitely the up Arun and the down Arun. Definitely try to get it below 30. Our yellow line down here. We like that separation, right, between those two. Kind of like you saw over here. And there was a little bit of a break higher. It didn't last too long. we're not looking for this consolidation, these two lines together. Now, more of that discussion into last week, but folks, this is what I wanted to show you all today. There were some others as well that were out there. I'm just going to throw these out just real quick. MCHP just hitting a golden cross today. Not a lot of golden crosses out there. Look at the Arun as we just hit a golden cross within the last 3 days. Not really a TTM squeeze, right? Expansion of volatility, but that's, momentum could be a powerful thing. The Arun's holding that level, right? As well as a golden cross. ABNB as well. Okay, nothing down here in terms of the Arun CTSH, and we'll wrap it up there. Maybe that lower will start to decline a little bit more, possibly as CTSH begins to break higher, but you can see we've come out of that range right there, maybe this longer term flag. All right, folks, well, there was a lot of information there. Give yourself a pat on the back for, sticking with all of that info. Great to have you here. I look forward to this class each and every week. Folks, again, if you found this informative, of value to you, smash that like button. Love to have you subscribe to our channel. Thanks so much, Cam, for your help as well. It's great being with you all. Have a fantastic rest of the day. We'll keep tabs, we'll keep an eye on those alerts that we set in this class and more going forward. So take care, everybody. See you next time.